If you're in the market to buy a house, the news for you the last couple weeks has been better. What I'm saying is there's hope for home buyers. The market shift is here, it's real, and buyers may want to pay close attention to what's going on because things are looking up and you might want to get ready. Yes, rates drop big time, but keep in mind they fluctuate. And the point of this video is that things are finally headed in a positive direction for buyers. Let's talk about what's happening with those rates. If home ownership affordability is an issue for you, what follows is good news. In the week ending on July 8th, 30-year fixed mortgage rates fell to 5.3%, down from 5.7% the week before. What this means in real numbers, to buy a home for $350,000, however you got to that loan amount, at 5.7, including taxes and insurance, that would run you about $26.15. At 5.3%, including taxes and insurance, that'll run you about $25.28. That may not seem like a lot. We've got a long ways to go, but it's a good start. Will it go up again? I'm sure it will. What we're watching for is a downward trend. 30-year fixed isn't the only game in town. You have other options as well. 15-year fixed rates average 4.45%, down from 4.83%. This type of loan is likely for those that were considering that option anyway. Bottom line, it's a bit better. The 5-year adjustable rate averaged 4.19, down from 4.5. ARM loans can be risky, but may be an answer for those that are looking for another option to home ownership. There's a lot of different types of ARMs, and I can't stress enough, make sure you have a clear picture of the risks and the rewards. Talk to a lender you can trust, like a referral from a friend. As last week's rate drops seem to be a surprise for so many, it's not responsible to try to predict what rates are going to do. I'll leave that to the experts. My point here is don't assume anything about rates because, as last week proves, changes can come unexpectedly. Now let's talk about how the shift in the housing market is starting to bring relief to the buyers. In an oversimplified nutshell, affordability is affected by income, interest rates, and home prices. We've touched on interest rates, and they're headed in the direction we want at least for a week. Housing prices are in the midst of a massive shift these days. According to Zillow, the market is passing or has passed an inflection point, leading towards a more balanced condition. What that means is the housing market is turning the corner. The days of skyrocketing prices seems to be in the rearview mirror. A balanced market in real estate is when there's 6 months of inventory. That means no excessive pressure on prices, up or down. Only the quality of the product, including location, determines pricing. We are a long way off from that kind of inventory, but across the country there's been a 64% increase in the number of listings, which means more competition for sellers, more options for buyers, far fewer multiple offers, and concessions being asked for and agreed to by the sellers to secure buyers for their homes. Another huge change is the number of price drops, meaning lowering of initial asking price by sellers to attract buyers, and has been enormous lately. In some areas as high as 40%, but it's happening in general across the country. Of course, this being fueled again by more competition and fewer buyers. To be clear, this does not mean that home prices will be lower than they were this time last year, but it absolutely means they're leveling off. As I said in a recent video, sell your home now. As more and more homes come on the market, buyers will be much less motivated to pay top dollar. The tables really have turned. What does all this mean in relation to affordability? Simply put, if home buyers have more options when looking at homes, if the rates keep trending down, their chance of finding a home that suits their lifestyle and their budget goes way, way up. I want to make an important point. You've heard the median home price is $450,000. Do not let that discourage you. Remember, all that means is half the homes sold are less than the $450,000 median price. The other half is higher. There are homes out there perfectly suited for your family that won't cost you an arm and a leg. As inventory continues to grow and sellers have to compete with each other for fewer buyers, the patient and savvy buyer could win big, not only with a better price, but with concessions. That can mean huge savings at the closing table. As for interest rates, as I said in the opening, I've made this video to encourage buyers to keep an eye on the market because things are leaning in your favor. What will happen to interest rates? I really have no idea, and I don't think anyone else does either. But if you pay attention to what's going on, you may find yourself paying a lot less at the closing table. If you like this video, tell a friend. Give it a like to help me spread the word, and subscribe so you'll know when the next one drops. Thanks for watching. Talk to you soon.